You took a trade today that had nothing to do with the market. You know what? You felt it in the moment your finger moved to the buy button. Something in you that was not analyzing structure, not checking confluence, not running the checklist. It was reaching, it was grabbing. Like a person reaching for their phone at 2 in the morning. Not because they need information, but because the silence in the room has become unbearable. And the candle moved and you were in, and for about 90 seconds, you did not feel whatever it was you had been feeling before you opened the chart. That is what I need you to hear right now. You did not trade the market today, you traded your own emotional state. And until you understand exactly how that mechanism works, every strategy you touch will be corrupted at the point of entry. Because the person pressing the button is not executing a plan. They are self-medicating. By the end of this video, you will understand the 5 specific emotional shortcuts your brain uses to turn trading into a regulation tool instead of a business. You will understand the neuroscience underneath, which will remove a layer of shame. You have been carrying about this for months or years, and you will have a concrete physical protocol you can use starting tomorrow to intercept the shortcut before it becomes a position. But here's the cost of not understanding this. Every trade you take as an emotional shortcut corrupts your data. It poisons your sample size. It makes it impossible to know whether your strategy works because you're not actually trading the strategy. You're trading your feelings, and you will spend another year, 2 years, 3 years changing systems, blaming setups, searching for the edge. When the edge was there the whole time, and you simply could not access it because your hand was being moved by something else entirely. So let's start with the story you have been telling yourself, because it is almost certainly wrong and it is keeping you stuck. You say, I overtraded today, or I lost discipline, or I broke my rules. And those sentences feel accurate in the moment, but they are descriptions of what happened on the surface. They are not explanations saying. You lost discipline is like saying a car crashed because it hit a wall. Yes, it hit a wall, but why was it going toward the wall? Who was steering? What were they trying to avoid? When you say I lost discipline, you're treating yourself as if you simply malfunctioned, as if a rational operator temporarily went offline and did random damage. But you did not do random damage. You did something specific. You used the market to change how you felt. And if you do not understand what you were trying to change and why trading felt like the fastest way to change it, you will do it again tomorrow. And the day after, and you will keep calling it a discipline problem. And you will keep trying to fix it with willpower. And willpower will keep failing. Because willpower is not the right tool for what is actually happening. This is what I call emotional shortcut trading. And I want you to hold that phrase, give it weight. Because naming it is the first act of separating yourself from it. Emotional shortcut trading is when the primary function of entering a trade is not to capture a probability-based market movement, but to alter your internal emotional state. The trade is not the product. The feeling is the product. The entry is just the delivery mechanism. You're not trading the chart. You're trading your own discomfort. And the market, the actual market with its spreads and liquidity and other participants, is just the medium you have chosen to get the hit. You could be scrolling social media, you could be eating, you could be texting someone, but you chose the chart. Because the chart gives you something those other things do not. It gives you the feeling of doing something productive while you avoid what you actually need to feel. But before I walk you through the 5 specific shortcuts, you need to understand why your brain is built to reach for shortcuts in the first place. Because if you do not understand the wiring, you will keep treating this as a moral failure, and moral failure is a dead end. You cannot discipline your way out of a nervous system response. You can only work with it. Here's the basic mechanism. Your brain's primary operating directive is not to make you profitable. It is not to make you consistent. It is to reduce discomfort as quickly as possible. That is the job that has always been the job for 200,000 years. Discomfort meant threat. Discomfort meant something is wrong. Fix it now, move, act, resolve. And the brain developed an entire architecture around rapid resolution. When you feel an unpleasant emotion, your nervous system generates what is essentially an action urge, a pull toward doing something, anything that will shift the internal state. And the brain prefers actions that are immediate, that are available, and that provide a sense of agency. Trading gives all 3. You can open the chart in 4 seconds. You can enter a position in 2 seconds. And once you're in, you feel like you're doing something. You feel like you're in motion. You feel like the problem is being handled. The discomfort has been converted into action, and the brain registers that as resolution. Even though nothing has actually been resolved, you have just moved the discomfort into a position on the chart and called it a trade. This is not weakness. This is not a character flaw. This is a 200,000-year-old survival system doing exactly what it was built to do, operating in an environment it was never designed for. The market is the perfect playground for this wiring because it is always available, always moving, always offering the next action. There is no closing time. There's no natural stopping point. There's just the next candle, the next setup, the next chance to feel like you're doing something instead of sitting with what you're actually feeling. And you did not choose this wiring. You inherited it. But you are responsible for learning how it operates in you, specifically in the context of your trading, because nobody else is going to do that work for you. No strategy will do it. No prop firm evaluation will do it. No mentor with a Discord server will do it. This is yours. Now, The 5 shortcuts, and I want you to listen carefully because you will recognize yourself in at least 2 of these, maybe 3. And the recognition is the point. You have been doing these in the dark, in the blur, in the half second before the click, and bringing them into language, into structure, into something you can name in real time, is the beginning of intercepting them. Shark pet number 1. Boredom. And I want you to take this one seriously because most traders dismiss it. They think boredom is trivial. It is not. Boredom, neurologically, is a state of understimulation. Your brain is not getting enough input, and it interprets that as a kind of threat, not a survival threat, a relevance threat, a signal that you're disconnected, that nothing is happening, that you're outside the flow of things. And for a trader who has been conditioned to associate the charts with stimulation, with the rush of a moving candle, with the hit of a green position, boredom is almost physically intolerable. So you open the chart when you do not have a setup. You scroll through time frames looking for something, anything that justifies an entry. And when you find a shape that sort of looks like your setup, you take it, not because it meets the criteria, because you needed to feel stimulated. You needed to feel in the game. And the trade was the fastest way to get there. You have had days where you sat through the entire London session with no clean entry, and that was correct. That was the plan, but you felt restless, agitated, like you were wasting time, like you should be doing something. And that agitation is not a signal to trade. It is a signal that your brain is understimulated and it is asking you for input, and you gave it a trade instead of a walk or a stretch or 10 minutes away from the screen. Shark putt number 2, frustration and anger. This one is more volatile. You took a loss. Maybe it was a clean loss. Maybe it was a stop hunt. Maybe the news candle took you out 2 pips before reversing and hitting your target. And something in you is hot, tight, clenched. And the rational part of your brain says, walk away, come back tomorrow. But the other part, the older part, the part that experiences a loss as a personal insult, says no. No, we are going to fix this. We are going to get it back. And you re-enter, often in the same direction, often with a wider stop because you're trying to give the trade more room, which really means you're trying to avoid feeling that specific pain again. Or you switch direction because you're angry at the market and you want to catch the reversal, and the reversal is not really a setup. It is a wish. You're not trading price action. You're trading your anger. You're trying to make the market give you back the feeling of being right, of being competent, of being in control. And it will not. It cannot. The market does not know you took a loss. The market does not owe you a refund, but the shortcut makes you feel, for the 3 seconds between the click and the candle moving, like you're doing something about the injustice, and that 3 seconds is the product. Everything after that is damage. Shark put number 3, self-doubt and the need for validation. This one is quieter. It feels like a small nagging voice. Am I actually cut out for this? Do I actually have an edge? Am I fooling myself? And the discomfort of that question, of not knowing, of the possibility that you might be spending months or years on something that will not work, is so corrosive that your brain looks for a way to answer it quickly. And the fastest way to answer it feels like taking a trade. If I win, I'm real. If I win, I belong here. If I win, I belong here. If I win, I'm not wasting my time. And so you take a trade, not because the setup is there, but because you need proof. You need the green number to tell you that you're not an idiot, that this is not a fantasy, that you are allowed to be here. And if you win, the relief is enormous and it is addictive. And it sets up the next trade to be about validation again, because the doubt will come back. It always comes back, and you will need another hit. And if you lose, the doubt deepens and you either spiral or you numb out or you close the laptop and do not open it for 3 days. You're not trading a strategy. You're trading your self-worth, and no strategy can survive being used as a referendum on whether you're enough. Sharp put number 4, anxiety and the need for control. This one shows up as over-preparation, over-analysis, and then a desperate, almost relieved entry. You have been staring at the chart for an hour. You have drawn every level. You have checked every time frame. You have read the news. You have watched 3 different analysis videos, and you're not calm. You're more anxious than when you started. Because all that preparation is not actually preparation. It is an attempt to eliminate uncertainty, to make the trade feel safe before you take it, to get to a point where you can enter without any risk of being wrong. And that point does not exist. It will never exist. And your brain, unable to resolve the uncertainty through more analysis, finally just forces the entry. Not because the setup is perfect, because the not knowing has become more painful than the risk. You click to make the anxiety stop. You click to get to the other side of the decision. And once you're in, there's a strange calm. Not because the trade is good, because the decision is made. The uncertainty has collapsed into a position. You're no longer in the question, you're in the answer. Even if the answer is wrong. And that relief, that collapse from not knowing to knowing, is the shortcut. You're not trading the market, you're trading your intolerance of ambiguity. Sharp point number 5, loneliness and the need for purpose. This one is the hardest to admit because it does not feel like a trading problem, it feels like a life problem. You're sitting in a room by yourself, staring at a screen. Maybe you're in a prop firm challenge and you cannot tell anyone about it because they would not understand. Maybe you traded the London session and nobody in your life knows what that means or cares. Maybe you have been doing this for a year and you have not told your partner, your parents, your friends because you're afraid of what they will say or because you're afraid of being seen as someone who gambles instead of works. And the isolation of it, the secrecy, the feeling that you're doing this important, difficult, consuming thing entirely alone creates a kind of hollow ache. And the chart fills it. When you're in a trade, you're in the market, you're participating in something, you're part of the flow of global capital, of other traders, of the living system. You're not alone, you're in it. And that feeling of connection, of being inside something larger than your quiet room, is the shortcut. You're not trading for profit. You're trading to not feel alone, and when you close the platform, the room gets quiet again, and the ache comes back, and you open the chart again, not because there is a setup, but because you do not want to be back in the silence. But here's where it gets critical. And this is the part most people miss. The cost of emotional shortcut trading is not just the money you lose on bad entries. That is the visible cost. The deeper cost is that you corrupt your own data. Every trade you take as a shortcut is a trade that was not generated by your strategy. It was generated by your emotional state. And if you're trying to evaluate whether your strategy works, whether your edge is real, whether your system has positive expectancy, you cannot do that if 30 or 40% of your trades are emotionally motivated entries that have nothing to do with the plan. You're looking at a data set that is contaminated. You're drawing conclusions from a sample that includes trades you should never have taken. And so you conclude that the strategy does not work, and you change the strategy and the new strategy gets contaminated the same way. And you change again and you're in the loop. And the loop is not a strategy problem. It is an emotional shortcut problem that keeps disguising itself as a strategy problem. This is the connection to what we talked about in the last video, the operator problem. The operator is not just undisciplined. The operator is using the market to regulate their internal state. And that regulation is corrupting every execution decision. And this is also why prop firm evaluations feel so brutal. Because the evaluation adds pressure, and pressure amplifies every emotional shortcut. The boredom becomes more urgent because you need to hit a target. The frustration becomes more volatile because a loss is not just a loss, it is a step toward failing. The self-doubt becomes louder because the evaluation is a formal judgment on whether you're good enough. The anxiety becomes more constricting because the rules are rigid and the consequences are binary. And the loneliness intensifies because you're trying to pass this thing and you cannot explain to anyone why it matters so much. The prop firm environment does not create emotional shortcut trading, it amplifies the shortcuts you already have. And if you do not see them clearly in a normal trading environment, the evaluation will make them impossible to ignore, usually after you have already failed. So here's the protocol. And I want you to treat this as non-negotiable for the next 30 days, not because I'm telling you to, because every day you do not use it, you're adding corrupted data to your sample. You're reinforcing the neural pathway that says discomfort equals trade, and you're stealing from your future consistency. I call it the 90-second intercept, and it is 4 steps, and it is physical, not mental, because you cannot think your way out of a nervous system response. You have to move your way out. Step 1, you feel the pull. You know the feeling? It is the subtle lean toward the screen. The quickening, the thought that says, well, maybe just this one. The moment you feel it, you do not argue with it. You do not say, no, I should not. You do not negotiate, you simply name it out loud. If you're alone, you say, I'm feeling the pull. And then you name which shortcut it is: boredom, frustration, doubt, anxiety, loneliness. You say the word. You give it the label. This takes 3 seconds. And in those 3 seconds, you have moved the process from the reactive part of your brain into the naming part, the prefrontal cortex, the part that can observe instead of just react. You have created a tiny gap between the impulse and the action, and that gap is everything. Step 2, you physically leave the screen. You stand up, you walk to another room, or you walk to a window, or you walk to the kitchen and pour a glass of water. You do not look at your phone. You do not check the chart on your phone. You remove your body from the environment where the trade is possible. This is not a metaphor. This is the actual intervention. Your brain generated the action urge in the context of the screen, the chair, the desk. You remove the context, you interrupt the loop. 90 seconds, that is all you need. 90 seconds of walking, of breathing, of looking at something that is not a candlestick. Because the action urge, the neurochemical wave that says trade now, has a natural arc. It peaks and it falls. It is not a permanent state, it is a wave. And if you do not act on it within the peak window, it loses its grip. You do not have to defeat it, you have to outlast it 90 seconds. Step 3, you ask yourself one question and you write the answer down, not on the computer, on paper. The question is this: if I were not feeling what I'm feeling right now, would I take this trade? And you answer honestly. If the answer is no, then the trade is a shortcut and you do not take it. You close the platform, you walk away. You do not owe the market a trade because you're uncomfortable. You do not owe yourself a trade because you're bored or angry or lonely. You're allowed to feel those things and not fix them with a position. If the answer is yes, if the setup is genuinely there and the emotion is just background noise, then you proceed, but you proceed with the awareness that you felt the pull, and you log it because you're building the data set on yourself. You're making yourself visible. Step 4, at the end of the session, you write down one line. What emotion drove the most trades today? Not what the market did, what you felt. And you track this for 30 days. And at the end of 30 days, you will have a map. You will know that Mondays are your frustration day, that the afternoon session is your boredom window, that after a losing Tuesday, Wednesday is your revenge day, that the third week of a prop firm challenges when your self-doubt peaks and your entries get sloppy. You will have a personal emotional calendar, and you can plan around it. You can reduce your size on those days. You can skip those days entirely. You can build the structure that protects you from yourself, not because you're weak, but because you're honest. And honesty is the only foundation that holds. And here's the thing I need you to sit with before this ends. You have been treating your emotional life as an obstacle to your trading. Something to be managed, suppressed, overcome, pushed through. And that framing is part of the problem, because it sets you up to fight yourself every session, and you will lose that fight, because the part of you that needs to feel something is older and stronger and more persistent than the part of you that wants to follow a rule. You do not need to defeat your emotions. You need to stop asking the market to handle them for you. The market is not your therapist. It is not your validator. It is not your companion. It is not your proof that you exist. It is a probability environment where you execute a plan, and everything else, the boredom, the anger, the doubt, the loneliness, the anxiety, all of it needs a place to go. That is not the order button. It needs a walk, a conversation, a journal, a gym session, a moment of sitting still and letting the feeling be there without fixing it. And that is not soft. That is not anti-grind. That is the actual unglamorous, non-viral work of becoming a trader who can execute consistently. Because consistency is not a strategy. It is an emotional infrastructure, and you have to build it. Nobody will build it for you, and no strategy will build it for you. You build it one 90-second intercept at a time. One walked-away impulse. One honest sentence at the end of the day. And it compounds, not like a savings account. Like a nervous system slowly learning that it can feel discomfort and not die. That it can be bored and not act, that it can lose and not fix, that it can be alone and still be okay. And when that learning is deep enough, when it is in your body and not just your head, you will sit down at the chart and something will be different. The pull will be quieter. The urgency will be lower. You will see the setup and you will take it, or you will not see it and you will not force it. And both outcomes will feel fine. And that is what consistency actually feels like. It does not feel like excitement. It feels like calm. It feels like nothing is happening. And that is the point. And the next layer, the one underneath all 5 shortcuts, the one that determines which shortcut is your default. The one that decides whether your brain reaches for boredom or anger or doubt when the discomfort hits. That is not a trading question. That is an identity question. That is the story you carry about who you are and what you deserve and what you're allowed to want. And that story was not written by the market. It was written long before you ever saw a candlestick. And until you look at it, really look at it, the shortcuts will keep pulling you back because they are protecting that story. And that is where we go next. Not because this video was not enough, because this video was the first layer, and you cannot build on a foundation you have not fully seen. So the next step is not another protocol. It is something harder and more important. And if you're ready for it, it will change the way you trade permanently. And if you skip it, you will be back here in 3 months watching this video again, hoping it hits differently. It will not hit differently until you do.